Welcome to the podcast. My name is Taylor Avakian, a private broker here in Los Angeles, and I have my esteemed guest, Zack Streit, on the podcast. He is my second broker I've had and a primary broker. However, he is a debt broker. Morgan, who was on the podcast previously, is mostly principal side now. So this is the first official, full-time broker on the pod, man. I'm excited about this.
Love it. Thank you. Thank you for having me.
So, Zack, if people don't know you, what they should, because they listen and own multifamily. Tell me a little bit about yourself, where you're at today, and then we'll jump into how you got to be one of the leading debt brokers. And I would say for construction and multifamily in SoCal and across the country, one of the premier ones. So give me the little backstory.
Thank you. Wow. Yeah, I appreciate that. So I'm currently a founder and president of Priority Capital Advisory, which is a boutique, largely debt brokerage, some equity, that I founded 9 months ago. So,
That new founder mentality, let's go.
New founders, startup-ish. I've been in the business 20 years, so
okay.
I would say it's hardly new, and on the advisory side for, let's say, 8 years.
Yeah.
But it is a new flag and a new banner, and so it's really, really exciting. And we've had a great start. We've closed 13 deals in 9 months in and I think against, I would say, extremely challenging market conditions.
Yeah.
So I'm so proud to be an entrepreneur, proud of what we've done, and really excited for the future. A little bit about me. I'm from Southern California, originally lived here till I was 18. Then spent the first decade of the 2000s in New York, where I did college, law school, business school at night, and I actually worked for 4 years at a big UK life company called Aviva in one of their equity investment groups.
Okay.
And it was great. Living in New York is an amazing thing in your 20s. There's a lot of young people. There's an incredible real estate community. There's an energy to it.
Dollar slices, man. Like, how can you beat it?
You can't beat it. The home of Five Guys.
Right?
For those who know.
Yeah.
No, you can't beat it. And it was great. I spent 10 years there, and I ended up moving home in 2011. I did so because I couldn't find a spouse in New York. Just New York women wouldn't have me.
Yeah.
And I was looking to be involved in a different facet of real estate. So I was working at the time what was called a real estate fund of funds group, which basically meant that we raised UK sovereign capital, pension fund capital, commingled that with UK insurance company capital, because Aviva's a UK life company, and we invested it into real estate funds. And I wanted to be on the deal side of real estate. I knew that very early on. Problem was it was the GFC and there were very few jobs available. So that combination brought me home to LA. I worked as a lender for the first 5 years of my time in LA, including at Colony Capital in a CMBS group of theirs. And I also met my wife shortly after moving home, and we've been together for, call it 13 or so years now. And we've got 2 children, 6-year-old and 4-year-old. They're both awesome boys, keeping me on my toes.
Oh, yeah.
I then decided around 2016 that, you know what, I didn't want to be a lender anymore. I had done a stint on the equity side, and just being a developer seemed pretty risky to me. I didn't see the opportunity there the way many of my clients do. So in 2016, I kind of, took the leap of faith to the quote dark side.
Yeah.
And I became a capital advisor after, a guy who had 10 years of principal experience and, 2 graduate degrees. And people told me I was nuts. And they were like, why would you ever do this? You have no control. You've got all this principal side experience. Like, how and why do you see opportunity there? And to be honest, I didn't have a great answer. And the answer was just, I've got this feeling inside that says, I should go do it. I have 10 years of debt and equity capital markets experience already. I've got a book of clients that, I know are prospective ones or guys I did deals with, and they were a little bit different than my target profile client now, but, it was enough to start. And there was something like super entrepreneurial about the brokerage profession. And I think that was probably what my inner voice was telling me. I think, having done, call it almost 4 years at Aviva and a couple years at Colony Capital, I love the people that I met there. Some of the smartest people I know. And I learned a ton being there. I think part of what I also learned though is that being an entrepreneur is in my DNA, and I just wasn't sort of, cut out for a kind of a larger corporate environment. And so I think while the transition wasn't simple, it really fit for me. So in 2016, I started at George Smith Partners. I spent the first 6 years of my career there, then co-founded a smaller shop with a partner for 2 years after that, and then decided 9 months ago, hey, it's time to found Priority Capital. And that's sort of a little bit about me and
I love
how
it.
I got to where I am today.
Do you suggest people who want to get into debt brokerage space, do you suggest they do what you did in terms of working on the corporate side first and then getting into brokerage, or being a broker and then just doing brokerage right out the gate?
So that's a really good question. And it's funny, I'm going to answer it a little circuitously. I remember when I was in business school, Simon Ziff, who's a big East Coast boutique broker, owns his own brokerage house, super successful guy, and somebody that I admire a lot, was kind of on the board of NYU Shack. And I mean, I didn't know much about him, but I just knew that like nobody had anything against him. He's great, but just like the perspective amongst um, graduate students with respect to brokerage was not a good one. It was like, why would you do that? That kind of disdain,
bottom of the barrel.
bottom of the barrel.
Yeah.
And I bought into that just because it was groupthink and I didn't know any better. And I wonder sometimes if I didn't, would I have started this earlier? Would I have been even more successful? Now it's possible that I wouldn't, and I wouldn't even be doing it anymore. Maybe I'd be burnt out. But I can't help but wonder that. So I think my answer to your question directly would be, everyone's got to kind of trust their gut and go their own way. Brokerage is many great things, and one of them is an incredible place to learn. So if you start at a brokerage, like out of college, or maybe you're transitioning into real estate and you need a first job, you will learn the landscape of players, who the borrowers and buyers are, the sponsors, who the capital is, both equity and debt, and both are critical to getting deals done, and then who all the service providers are, other brokers, competitors, I guess, attorneys, different service providers. It's a wonderful jumping off point. And sometimes I wish I had that experience of not being a producer. When I started in 16, I was always and only a producer. And so I didn't never really work for anybody else.
Yeah.
And I didn't really cut my teeth in the business. Look, it's not one size fits all. I would say I've had an extraordinarily successful 8-year tenure so far, and I'm very, very grateful for that, and to all the people that helped me. I think there may be no better learning ground for somebody just starting off to go work for another broker. Or look, if your heart is set on hunting and you don't want to process somebody else's deals, great, go hunt.
Yeah.
And that's possible too. There's a lot of young people like you that I think started as a hunter,
Yeah.
and have been wildly successful, and they just sort of, they knew themselves, and they acted in concert with that. And that's amazing.
So you did not do cold calls when you started?
So I did not do cold calls when I
Really?
started. No, I was.
Oh, you were gonna continuing.
Yeah, I was thinking through your question. I'm a little slow on the uptake,
That's
man.
okay.
It's Friday. I have a long week.
It's all good.
I did some.
Okay.
I didn't do it like the Kyle Matthews way of cold calling, or maybe, the Marcus and Millichap or Meridian way of cold calling. I did some. What I found was, I think cold calling works. You meet a lot of people that way. You can build relationships. It takes time, and so you have to give yourself time. But I quickly found that the type of brokerage that appealed to me wasn't commodity stuff. It's very difficult to cold call for commodity stuff, right? It's a knife fight, but you can prevail if you are a good person, if you are persistent, like all the things that you are.
If you have the relationship, it's at that stage, it's who do they like the most?
That's right. Exactly right. For kind of middle market brokerage, which I haven't talked about Priority and exactly what it does, but for middle market brokerage, call it deals that have a total capitalization of, call it 25 million and up. That isn't so much the province of cold calling anymore. That's the province of relationship building, a lot of which is in person, conferences, flying out, meeting people, leveraging your network, email blasting, social media, and then you begin to build it organically. And I knew I wanted to go in that direction. So what I quickly started doing was trying to attract, sort of deals and sponsors that, could fit that profile. And it wasn't immediate. I mean, I started doing $1, $2, $5 million loans. And I always dreamed of a day where maybe my minimum would be 15 or 20 million, which it is now, and was never sure I'd get there, but worked as hard as I could, to get there. And look, I worked hard and I had a lucky break. My first year of brokerage, I sourced a $100+ million deal.
No shit.
And I closed a $50-ish million loan on it. It was
Through how did you do it?
so this is interesting. This is the relationship piece that you talked
Yeah.
about. A buddy of mine who was an attorney not in real estate referred the deal to me. And it turns out that I knew one of the three principals. I had met him 5 years before when I was a lender, never even a thought of becoming a broker. And I met him through kind of a mentor of mine. I think mentors are really, really important. Everyone needs a North Star
Yeah.
in their world. And we kind of lost touch, me and this individual. And then 5 years later, we reconnected.
Wow.
And just that having happened and the deal requiring a lot of hustle. And look, I had a decent background. I wasn't starting from scratch. I had kind of 10 years of principal side experience. I ended up, kind of winning the assignment. The funny thing is it was an office to hotel conversion.
Jeez.
I had never financed hotels before.
Yeah.
I had never financed a conversion, anything on this scale. But I think just a combination of persistence, background, always having been a relationship guy. And look, let's call it what it is. Like having gotten a little lucky, but really placing myself
Yeah. You
in
created your own luck.
the context of creating it made it happen.
Yeah, because all the 10 years prior and all the relationships that you built had culminated to allowing that moment to actually happen. For those who don't know, because there are my mom's going to watch this and she has no idea what a debt broker is. Can you tell people like what is a debt broker?
It's time for that. Okay, so it's a great question.
Yeah.
And it can be a little esoteric. A debt broker in its simplest form is a broker that helps his client, generally a developer, owner of commercial real estate, source debt financing for their property.
Got it.
So if you own a property or you want to build a property and you need help obtaining a loan, you would come to somebody like me. And what I would do for you is run a process, and then through that process, help you decide from the myriad lenders that are out there, who is the best one suited for this project. And, include things like, well, what are you building? Where are you building it? What kind of leverage do you need? What is your tolerance for interest rate? Are you willing to sign a personal guarantee or not? And so on and so forth. And I think that's what it is in its simplest form. Clearly the markets are big and fragmented. And what I said can, easily be 9 months worth of work. Yeah. I think I said it in about 30 seconds.
Yeah.
But at heart, that's what a debt broker does.
Yeah. You're a conduit. You're same to us. We're a conduit between a buyer and a seller, and we're making a transaction happen. And you're making that happen on the debt side of things, which is very similar, and you get paid for making that happen.
Right.
There's different kinds of debt brokers as well, different specialties, just like there's apartment investment sales brokers, office investment sale brokers. What is the different pockets of debt brokerage that people can go into? And why did we talked a little bit, but like, what was you're the institutional side, I would say, of debt brokerage comparative to the smaller $1 million, $2 million, $3 million deals, which is just a broader brush. So what are the different buckets? And then why did you do the institutional?
Yeah. No, so great question. There was something about middle market commercial real estate that always appealed to me. And I kind of broadly define that as deals that start with a $25 million capitalization and up. So you're dealing with pretty sophisticated guys, and it's not their first rodeo. And you're probably maxing out between 250 and 300 million on a deal. I've done one that was like, call it 700 million, and I closed a $460 million loan for it. So that's at its kind of biggest form. Yeah. But that's not normal.
Yeah.
That's not my day-to-day. My day-to-day is probably closing loans that are between 20 and $50 million.
Do you get like a bit, like how much basis points do you get on like a 460? Because most loan broker fees are a point, right?
They start at a point and go down.
You don't have to give me the exact number,
Sure.
but like, what's a range of someone does a $400 million loan? What are the typical ranges of points that you could get on something like that?
Sure. So it's not an easy answer because it depends. Depends how much work goes into it.
Okay.
The one that I closed was a $460 million loan on a 1 million square foot high-rise development deal. And that high-rise was in Portland in 2019 and consisted of about a 250 key Ritz-Carlton hotel,
Jeez.
130 or so Ritz-Carlton residences, 160,000 square feet of office, and 20,000 square feet of retail. It was groundbreaking. Nothing like that existed in Portland before. It's now built. Sad timing, COVID, Portland, and all the kind of bad politics and press.
Yeah.
That was an extremely difficult deal, and I'm very grateful we got paid very handsomely for it. But I would say typically for a deal that big is probably somewhere between 20 and 50 basis points.
Okay.
Which would make sense.
Yeah.
I hear of a lot of big conduit CMBS deals getting done, and I'd say it's typically a 25 bip fee.
Okay.
The 1 point is correct. I would say debt brokerage fees are typically 1 point and down.
Got it.
Depending on what you were being asked to do, depending on how difficult the deal is, how much volatility, is it construction, is it an existing asset, is it land, so on and so forth.
Mm-hmm. Got
So
it.
I would say average fee in my book is probably somewhere between, 60 bips and a point.
Got it. And it's just, relationships at that point and figuring out what that
And
value is.
and you have to draw the right line. As a broker, you have to understand what is going to incentivize you. And that answer is different for everybody and depends how you're structured. So for me in Priority Capital, I've got 5 employees, and they're all salaried. They are not commissioned, and that is intentional. They are all execution folks, so they focus on processing and closing deals.
Mhm.
Again, intentionally speaking, those resources, that infrastructure is critical to getting my clients' deals done and being able to probably juggle a pipeline of 20 deals at once,
Mhm.
which if you're going to be in business, that's what you have to do as a broker because you never know anything's going to close. So given that, I typically floor my fee at $150,000. Just nominal dollars.
Yeah.
So I need to be doing deals that are 15, 20, 25 million in order to get there. But if I can generate that, then that seems worth it to me.
Got it.
And so that's another way that I triangulate into, what I should charge. Now that may not be true for others. There are guys that won't touch deals less than $50 million. There are also guys that don't want to be troubled with what a $25 million loan will require to close, and they want to make their lives in the $1 to $10 million space. And I will tell you that not all deals are created equal. Different sponsors, different deal sizes have kind of different responsibilities attending to them. For me, when I do deals, I do them exclusively only. That for me is an absolute red line. Alignment is critical. Otherwise, if you don't have it, you're not going to spend time on it. I urge sponsors. I'm like, you don't have to hire me. I hope you do, but you should hire somebody exclusively because the second things get tough, another broker who's non-exclusive is just going to cut and run to the next deal.
Yeah.
And so, in tough capital markets like we're in, you need somebody who's really going to lean in. And so having that is important. But I think where we can find it, the results have been nothing short of really stunning and great. And it's sort of how I've built the track record over time.
I kind of wish, so we talk about this in the office and it's always the grass is greener situation, but a lot of people I talk to and myself included, I'm like, if I would have started over again, I think being a debt broker would have been what I wanted to do because it's not that it's more predictable, but there's just it's like being a leasing agent, right? Everyone loves leasing agents because they typically give you value in terms of landlords love leasing agents. Bring me a tenant. You're bringing me immediate value.
Yeah.
A debt broker, equity broker, whatever, you're bringing them value by, giving them money. I'm over here hey, let me sell your building, So it's a little bit different of a thing, but I like too that typically on the loans, there's a timeline. These aren't, these aren't 30-year loans most of the time. They're 3-year, 5-year, 7-year, 10-year. So that something's going to happen down the road where I sell a building to a mom and pop and they're never selling it again. I'm like, all right, well, that business is not coming back around, you know?
Right.
So I like the business model of brokerage, of debt brokerage, excuse me. And I think there's a lot of growth that you can do. And what's unique about debt brokerage too, is that there's different tranches that you can do. And also you can have equity, like you can
Yeah.
raise equity, which is almost same side of the
So
same
I do
coin.
some of it.
You
Yeah.
do some of the equity
Yeah.
stuff too.
So there are a few different varieties of us, touch on your earlier question. So there are guys that kind of do smaller deals. I would say that isn't me. There are guys that only want to broker Fannie and Freddie deals, so agency lenders or DUS licensed lenders. You need to have access to a DUS license, which I think costs at least $50 million. So, and there are a finite number of them. But if you have access to that and you're at a big shop like a Berkadia, or a CBRE, you might want to only focus on that. There are correspondent lenders, which are really insurance company lenders that are out there. Mortgage bankers, as we call them. They're brokers too, but like they largely feed all of their business to insurance companies. And that's going to be long-term fixed rate business. So, typically 10, 15, or 20-year loans. And I thought, look, all the brokerage spaces are great within the debt world. For me, those didn't quite feel, I know I'm crazy, entrepreneurially enough. And I thought, hey, let me do larger deals where the fees are a little bit bigger, sophisticated ones where you have to get really creative in your capital stack and where you really have to lean in, and like, that's going to get me out of bed in the morning. It's knowing one's tolerance for risk, what is in one's DNA, and that sort of space spoke to me. To address your second point though, like, I don't know, I also wonder about the grass is always greener. I'm like, I don't know, investment sales guys, like, they're just, there's a lot of buildings out there. Your fees can be great. You can get paid pretty well on them, probably better than what we can charge. And look, a lot of investment sales shops will sell the debt brokerage business too, and say, hey, if as a condition of me taking on your listing, you've got to hire the in-house debt broker as well. And then the investment sale guy gets a piece of that. And so like, it can be lucrative in different ways. I also think what's cool about your business is like, you usually don't have to travel very far, I don't think. Like, you're doing most of it in SoCal. I wish there was enough business in SoCal alone to fuel my business, then I wouldn't have to travel, but I'm on a plane every week. And I would say more than half my business is outside of SoCal because right now the entrepreneurial sort of risk, I think, of doing business in SoCal is comparatively high. It's unfortunate, but it's the case. And you just see more entrepreneurs taking risk and seeing opportunities elsewhere. And a lot of that is in like the Sun Belt. I've done a lot of business in Texas and Phoenix recently.
Got it.
I was just in Salt Lake this week speaking at a conference for that reason, and so on and so forth. So I'm not complaining. I like meeting new people and I don't mind getting on a plane, but it certainly would be easier if it were all sort of in the backyard. So yes, the grass is always greener. Is also greener from my side too.
Very true. Very true. All right. Fair enough. I know it's everyone complains about that would be so much better. It's just like different product types too. People are like, oh, if I sold industrial, oh, if I sold retail,
Right.
And everything's in cycles too. What's the craziest deal or the deal that you remember the most where you're like, I don't know how we did that, but we figured it out?
The craziest deal was, is probably both deals that I mentioned. But I think when I think back to the one that really sort of, I think, cemented that this was the right profession for me, or that really planted the seed, it was the kind of LAX dual branded Hyatt deal, Hyatt House, Hyatt Place. So that's a deal that I mentioned before. It's on West Century Boulevard, kind of very close to the mouth of LAX. And sponsors were buying an old, dilapidated, half-empty office building and converting it to a hotel. And I closed a $50 million loan with Bank OZK back in the day.
Damn.
Back in 2017. And, that was like my first full year as a broker. And I kind of, was all worried. I didn't really know what I was doing. I was less experienced than, guys who've been doing it forever. And, how was I going to get this done? But I did. And that taught me that, hey, it's not an easy profession. It's not going to be an easy road, but this could be a good road. This could be a fun road. And I'm good at this. And this wasn't just a complete aberration, but this was a continuation of like all of the hustle, all of the relationship building and that positioning myself as a debt broker, like, was right at the intersection of capital and opportunity.
Mm-hmm.
And that worked for me.
Mm.
I think if I hadn't closed that deal, even though later in my career, 3 or 4 years later, I closed a $460 million loan,
Mm.
I'm not sure that I would have remained in the debt brokerage business. Maybe I would have gone back to the lending side or done something else. So I think that really is the most special, because I credit it with not giving me my start. I had already started, but I really credit it with like buoying me forward.
Mm.
And the Portland Ritz-Carlton deal did in different ways too,
Yeah.
but it wasn't at the beginning.
Yeah. Yeah. That first one always hits and always is like, I can do this. It's almost the belief. You break the belief that you can do it. It's that one where you're like, okay, I can do this. And
That's it.
sometimes that's all you need.
That's all you need. And if I were to send a message to the younger folk on the podcast, it's believe in yourself.
Yeah.
I mean, geez, if you would have told me 15 years ago I'd be a broker, I'd laugh, or maybe I'd be horrified because of, what my thinking was then. And then if you told me I'd be successful, I'd be shocked. And then if you told me that I'd be running my own brokerage firm, even more shocked. But like, really, if I can do it, others can do it too. And yeah, of course you need luck, but like that's one small part of it. The other is just hustle and drive and grind and relentlessness and sticking with it, even through a tough capital markets like now. And good things happen when you do. You get rewarded when you do. So hopefully that helps somebody out there. And it's exactly what somebody needed to hear.
Yeah, for sure. What percentage of your time is spent trying to find the lenders to plug your clients into versus finding clients?
Yeah. So that's a good question. And it's changed over time.
Yeah.
For sure. I would say these days I try and spend most of my time on the client side. And that includes both prospecting, I suppose, or business development, trying to bring in new business, and then also staying really close to my current clients, both while doing deals with them and also not, because maybe we just finished one, or maybe it's going to be a few months before the next one starts. And that's become critical. I mean, at the end of the day, going to incentive and alignment, like, you have to know who butters your bread, and it is the client that signs yours and mine engagement agreement. And so staying close to them is paramount. Now, with that said, you have to be able to service them.
Yeah.
So you better know the lenders, or you better be able to find a more esoteric one. But I built a track record of that. I've got 8 years of doing it and 20 years in the business of doing it. So it's not that wouldn't be time well spent. It would, and I wish I could spend much more of my time doing that. But the demands of the business are such that I would say the vast majority of my time is spent on the client side. And then I've got a team of 5 people that help me manage the process, help me run the process. And we are constantly databasing and adding new lenders. And, capital markets are volatile. This guy's in, this guy's out. This guy started a new program. He moved over there, following people and making sure that we run the very best process, which is sometimes the widest process, sometimes not, to make sure that we are efficiently matching our clients with capital.
So then let's dig into where we currently are in the debt cycle. Like,
Sure.
there's a lot that's changed over the last 3 years, 2.5 years, if you want to call it. What's going on in the debt markets right now?
Yeah. So super timely question. And as always, not a simple one, but the debt markets today are the best they've been in 3 years. So let's start on a very optimistic.
February 28th, 2025. Just
February 28th, 2025. They are the best they've been since probably February of 2022, kind of right around there, March, where the rate hikes started. And I think they're best because, well, there's an election behind us. We've had 4 rate cuts. And really interestingly, the phenomenon that you saw in 2022 that hurt the markets is that reverse phenomenon is helping the markets now. And so specifically bank lending. One of the first things to happen in early 2022 as the Fed started hiking rates was that banks pulled back. And they became very quickly noticeably absent from the market. And any time you remove a major player from the market, you suck liquidity from the system, the market starts to stall and deals go bad. And that's exactly what happened. There was a tremendous amount of fallout in 22 and 23. What's changed in the last 6 months is that banks are back, and specifically like regional banks, money center banks, and even local banks. And they're back because they spent a couple years working out issues. They're back because depositor bases have increased. And they're back because loan payoffs have started. And they're back because they have either managed or are working through their office exposure. If debt or the lack of availability of it led us into this mess, it is possible that debt and the availability of it leads us out of this mess. And I think you're starting to see that. And so that's really great. That's a huge thing, and it can't be ignored. And it is something that I think people are excited about, and what could lead to more liquidity and more transaction flow in 25.
So that's interesting because the rates really haven't come down significantly from, where they were in 2022 at the end and the peak. I mean, feels
That's
like
right.
we're in the same
That's
rate.
right.
So you're just saying that they basically fixed a lot of the bad debt situations that they were having,
Yeah.
which allows them to have more liquidity and their books are more balanced.
And they can lend. And so when entrepreneurs want to take risk, first of all, on a short-term basis, SOFR's down about 100 basis points because the Fed funds rate is down 100 bips. So, okay, that's a little bit better. But now you've got more liquidity out there. And you've got, interestingly, priced liquidity on the debt side, because banks are known for maybe lower leverage construction and bridge loans and even perm loans, but also commensurately priced. And so very attractive on the pricing. So I'll give you an example. I closed my first bank non-recourse bridge loan in 3 years last month. And it was an incredible deal. It was a deal in Texas. It was an industrial outdoor storage deal, which is a popular subset of the industrial asset class these days. We closed a loan with a bank, non-recourse bridge loan. It included $10 million of cash out, which is crazy. And IOS is not easy to finance from any perspective, because a lot of people just look at it as covered land, which it probably is, but it's the best form of covered land.
Yeah.
And we closed it at an incredible rate. We closed this bridge loan at a rate of 280 over SOFR. So that's insane. That's basically, at a rate that's, let's just say, like, I don't know, around 7%.
Wow.
So that's, I haven't seen that kind of pricing in a long time.
What were you getting before? 8.5?
At least. The best debt fund quote we had that was non-bank, also non-recourse, was like SOFR 330. So that was also a bit under 8. And most of the rest of the world was 8 and up. So seeing that was amazing. We recently signed 2 term sheets for 2 retail ground up deals in Phoenix, each about $25 million. And we signed those term sheets at a rate of 270 over. There hasn't been much pricing south of 300 in the capital markets for transitional deals in the last few years.
Yeah.
And I can confidently say it's now out there. Is it going to fit for every single deal? No, it's not. But, we're marketing a bunch of other deals, and we're seeing the same sort of feedback and the same sort of responses. And so that's been really positive. So just to be clear, bank lending being back doesn't mean that all the problems in the market are gone. It doesn't mean that the treasury rate is down, although actually it is over the last couple of weeks. And so that's awesome.
Yeah.
But you're still kind of at a low 4s 10-year.
Yeah.
And that is the barometer for real estate. So that's the single most important metric that's out there.
Yeah.
And you still have to contend with that. Yeah. Because if a treasury is 4.25, then, like, what's an exit cap? Well, I don't know, but it probably needs to be 75 to 100 basis points wide of that treasury, because why would I buy real estate if I could just buy the treasury?
Yeah.
And then you build from there. So that hasn't changed. I mean, it's changing now in front of our eyes, but, like, that is still high. I've always thought that the 10-year has to be at 4% for like 3 months for equity to start redeploying into, like, multifamily construction deals and even value add deals. Maybe on the precipice of that starting, that 3-month clock starting. I hope that we are.
Me too.
But that is still high. And so that is still hard. And look, SOFR was 525 basis points. It's now 425 basis points. So, that's a 20% change. So that's awesome.
Yeah.
It's 100 bips of savings. But it still means that the cost of many transitional construction loans are going to be 9-10%. 3-4 years ago, that same thing might have been 7%. And 7% might be risk on for somebody, and 10% might be risk off. And so that is all in the way to say that there are some positive things going on out there. Election behind us, talk of more foreign direct investment, lower SOFR rate, more business optimism than I've seen in years. And there are also headwinds. right? Stubbornly high treasury rate. Steel, from a real perspective, very high. Bridge financing, kind of in construction financing rates, even though they're coming down. High construction costs, expenses, insurance, payroll, R&M, just everything seems to be higher now because of inflation. So look, we've got our work cut out for us.
Yeah.
But it isn't all dour and bad in the way that it kind of felt like it was in 23 and maybe even the first half of 24. So look, hey, take your wins.
We're picking up. So so that's interesting to hear, because I keep hearing that we have more pain ahead of us in terms of a lot of these loans that the banks were kicking the can down the road, and they wanted to work it out with the sponsors and not take the properties back, and I'm seeing more properties be taken back, but I also hear that there's more to come. So with the rates not coming down, are you saying that you think that's not necessarily going to happen, or it's going to happen less, or what are you saying on that distressed asset side of things?
Yeah, so distress has kind of been a big mystery. People started talking about it in like March of 22 or April of 22 when the first rate hike hit.
Yeah.
And it's been a little bit of the boy who cried wolf to me. Not completely. There have been pockets of it. There have been deals that have gotten done. But of the trillions of dollars earmarked to make distressed investments, I would say if 5 or 10% of that is deployed, that's a lot. And I think two things have really stopped it from deploying from what I've seen. And that is banks extending and pretending, as you noted, and existing equity ponying up and paying down their loans or increasing or re-upping, let's say, a depleted interest reserve. There has been a lot of that. If there is a story about why the lack of distress has materialized, I think that's the story. I just worked on a deal where that occurred. We ran a process to replace an existing lender, and simultaneously was working with that lender to see if a pretend and extend or a blend and extend or a pay down and extend was possible. It wasn't easy. It wasn't simple, hard deal. And ultimately a pay down and a modification / extension occurred. And there's been a lot of that. And, folks have been quieter about it. If there weren't as much of that, I think you would have seen a lot more pref equity and other distress plays come to fruition, and they didn't. In terms of what I see going forward, I think it's going to be a combination. I can tell you that in my book, I'm working on 8 construction loans now. That's the most that I've worked on in probably 3 or 4 years.
New construction
deals that guys have syndicated the equity. They already had it. They were waiting for a better day. There isn't going to be a better day, and developers will develop, and so they're moving forward. That doesn't mean that there aren't also lenders foreclosing and lenders that are agreeing to short sales. I've got another deal in my book where a lender's agreeing to a short sale. So I know that's happening too. So it's a weird thing. It's not one or the other, even though maybe it should be.
Yeah.
It's both. And so that's really hard to explain, right? It's also hard for me to explain that equity and debt would have worked together to deal with so much of this distress, and you wouldn't have seen much more distress like you did 15 years ago during the GFC. I don't have a good answer for that. Economists and I guess market analysts will know better than me, but I believe there is broad consensus that there hasn't been nearly as much distress as everyone thought.
Yeah.
Will more of it happen? For sure, there's a trend of more short sales and more REOs that are happening now. So, sure, you go from 0 to 10 versus 0 to 100.
Yeah.
It's going to feel like more.
Yeah.
But it's not, it's hard for me to see a full-fledged recession occurring here, which would really trigger a lot of that. So I think, look, there'll be some of it, and guys that want to play in that space will be able to play. And then I think there'll be, other deals where entrepreneurs will still find pockets of opportunity and try and deploy accordingly.
Where are you looking to grow your business in terms of opportunities? What vertical or what is that look like for you? Maybe opportunities that you hadn't looked at before, or you think it's going to be a hot market? How are you looking about growing your business?
Yeah, that's a really interesting question. So I think it's just more organic growth. That's always the way it's been for me. I don't want to turn priority into a JLL or an Eve Still or anything like that, which is no disrespect to those guys. I know a lot of guys at
different
those shops.
business.
They're incredible, and I don't think I could do what they do,
Yeah.
frankly. And I don't want to manage hundreds of people. For me, I see priority always being an outfit that's got, call it 5 to 10, maybe 12 employees at most. And, goal of trying to get to somewhere between $500 million and $1 billion a year in production. And I think we can do that. I think the bread and butter of the business will always be 20, 30, $40 million loans. And how you really scale up is two ways. You do 3 or 4 of those a month, or you close a few, deals that are 100, 150, $200 million a year, or the combination of the two, which is really the Cadillac way of doing it and sort of what I hope for. So I think growth will come organically. The market has to recover probably a little bit, but it will come through sourcing more business, which in part is dependent on having the resources to service that business and kind of go that way. And if I can do that, I'll consider the business to have been tremendously successful. Would I open other offices? Maybe, if I felt like it was really important to attracting the business. And I, open question, would I add another producer or not? Historically, I've seen a lot of infighting in my career amongst producers when you have even just 2 of them, let alone, 10 or 15. And the questions that come up and the challenges are who owns the client, who gets the resources. It's just that simple. You can't avoid that. You can create, roles and responsibilities. You can create rules around it, but you can't avoid it. And so, like, having seen that, and also having, been further along in my career and, having a pretty good book and, a desire and really enjoying going out and hunting and bringing in business, I actually think that, what I need is just, more exposure so that sponsors know about the service I provide. And then as deal flow ramps, more people to help process that business. And so I kind of really see it, remaining kind of a sharpshooter outfit, but one that provides really intimate white glove service and just building on doing more of what I've always done.
Give me the playbook of how to get new clients. And you know what I mean? And the reason I say that is because that's a big part. Oh, my microphone fell. A big part of what I do is generating new business. Right?
Yeah.
And so I love creativity when it comes to getting clients and earning business and finding new ways to market. Doing the podcast has been fantastic, right? I sell apartment buildings in Los Angeles. And so if anyone wants to sell, right, it's that trust. So there's different ways of going and trying to build my book of business, I guess you could say. How do you approach that? What are you doing? And what do you think is the best fit for you moving forward?
Well, first of all, shout out to your business because you built it from the ground up.
Thank you.
With like your own drive and your own tenacity, and you're prolific. And so many of the guys that I work with here in LA know you, have a high opinion of you. And so I think that's awesome.
I appreciate that.
I would suggest that if anybody listening here wants to talk to somebody for a BOV or to list their property, that like you're the guy. You probably will not find a higher level of drive and responsiveness in this business. And that's something that I pride myself on, and you have it. I see how quickly you respond to my text messages. And so I can only imagine that if you're, giving me, and I'm like not your client per se, that service, all the more so for the other people that are out there. And look, transparency and drive and responsiveness are at the heart of what makes a good broker. And so when you have that, and folks don't know it, I hope they take my word for it.
That is getting clipped and going on my website.
There we go. Let's go. Testimonial, baby.
I appreciate it, bro.
How do you get clients? So this is the biggest challenge of brokerage.
Yeah.
And let me add to that challenge. You've got, in my opinion, at least on the debt side, I can't speak to investment sales, the same number of brokers running around today, it feels like, as you had in 21 and 22, and you probably have 2/3 less deals, it feels like. Now, there has been some movement. Some people have left, but not nearly the amount that I thought. So, again, there's no distress in the deal market, or there is distress, but things aren't transacting. And I would have thought the brokerage herds would have thinned. And it's been 3 years of a very anemic environment, and it hasn't thinned yet. And that is something I wouldn't have called. But against that backdrop, look, there's no one size fits all. It's everything. So, you need to be continually prospecting in this business because you never know what will close in your existing book. You need to be continually prospecting in my business because the more deals you have out there, the more information you call from lenders about what they are doing and are not doing. And that's so important to both your existing book and new deals you may source.
Got it.
And so, I don't have a one size fits all strategy. I wish there was one thing that just did it, but the things that do it are everything. It's committing to a space, which I did over 8 years. It's attending a tremendous number of conferences because those seem to be great business development tools for the type of sponsor and deal that I look for. So I've been to 6 conferences this year, and we're not even through 2 months of the year.
Jesus.
One in Miami, one in Laguna Beach, one in Vegas, one in downtown LA, and one in San Diego, and then one that I spoke at yesterday in Salt Lake. So that's a big part of it. And
Wow.
those conferences are target-rich environments. There are a lot of sponsors that are there, and staying in front of them and having them remember me or meet me is a huge thing. I try and foster a continual social media presence. That's a big one. And for me, that's LinkedIn and Twitter, not really Instagram. And I try and post at least once a week, if not twice a week. Some of it's advertisements for what I'm working on or what I've closed, and others just sort of thoughts, reflections that are there on the market. eBlast, I probably have, 10,000 people in my, eBlast database. And so I try and send an eBlast out, every month. And then I am constantly entertaining clients. I'm taking them golfing. I'm taking them to dinner. I'm flying out to see them. I'm flying out to look at one of their properties. I'm playing tennis with them. I'm having breakfast with them. That's just a very constant thing of what you have to do in order to stay top of mind in a business like this.
Yeah.
But do it and you'll be rewarded. And look, don't do it and you might be fine. Maybe I'm approaching this all wrong. And so if I am, I'd love to hear about it.
Yeah.
But
You
those
seem
are
to
the
be doing
things that
pretty well.
Thanks. Those are the things that I always try to do. And then it's when you do create the opportunity and a deal comes your way, making sure that you can pitch on it efficiently and well. But here is the most important thing if you're going to do middle market brokerage, in my opinion, and really a reason I set up Priority Capital. I wanted a relatively safe place to do deals, which brokerage isn't safe, but I wanted to know that when I did all of that work, all of that business development work, the conferences, the social media, the dinners, the basketball games, the golfing, the client events, whatever they may be, and I brought a deal in, I wanted to make sure that I could service that deal, that I could run the best process out there possible. Does not mean the deal will close. Hopefully it does.
Yeah.
But it means that I am delivering the best possible client service I can. And Priority was formed in large part to achieve that mission and carry out that mission. And, that makes me happy and thankful every single day that I have that, because gosh, what could be more frustrating than going to 6 conferences in 8 weeks, sourcing 20 deals and then them languishing, not being able to get back to clients with guidance, not being able to efficiently send them into the market, not being able to answer lender questions, to generate term sheets, to kind of create the buzz about your business, and then ultimately, hopefully, to monetize.
Yeah, it's super important. If you don't have a good product, which is the brokerage, the business, then no one's going to tell about your service. And really, word of mouth and referral
Travels and it travels fast.
It is the most powerful way to grow your business as a service professional, in my opinion. And so everything we do is trying to get that referral, that experience to be referral worthy, in my opinion, which, clearly you've done a fantastic job at doing that.
Likewise.
I want to get super tactical because I am a person who is obsessed with organization because it does not come natural to me. I'm very much a run and gun, athlete. Go run 50 yards this way, run into a wall right there. What is the actual tactical organization that you do to make sure that you are following up with clients, that you're setting the breakfasts, that you're the organization is just as much of a part of the brokerage business as making sure people don't slip through the cracks.
Yeah. Well, my short answer and somewhat flip answer is going to be not enough. Not enough. I wish I was a lot more organized than I am.
Use a CRM?
I use a CRM, yes.
Okay. So
not as diligently as I could, and it's on a to-do list to do more. I would say that there are a few parts of the CRM for our businesses, since you asked about it. One is on the execution side of the business, making sure you keep track of all the lenders that are out there. You have a database, and then who you talk to on a specific deal and what they said. And we'll do weekly capital markets updates with our clients. And you can be going out to 100 lenders, but you might do that across 15 deals. You can begin to do the math on what that actually means.
Wow.
And so you better be, and on that side, we are extraordinarily attentive to detail because it's easy to lose them. I need to get a lot smarter about the front end and more targeted marketing, but I'll also tell you that not having it and just having a blast database and social media is actually, it's worked pretty well to date.
Which is crazy.
Which is crazy. And so like, could I be doing a lot more? Like if I show up like in Dallas, like who are my top 10 sponsors in Dallas? And some of that I know, but it would be really nice to see a list. So I'd like to work towards getting that because I'm always kind of in so many different places. But I would say I at this point have generated a lot of like inbound traffic that like there are just very few days where there's nothing on my calendar, which is a bit of a barrier. So this year, something that I'd like to think about is how better to brand and market, but also to get a lot more tactical and organized in who I'm spending time with and who I'm reaching out to and why. I have spent a lot of time trying to figure out like how my bread is buttered, so to speak. And it's clear that like conferences and warm referrals are probably the two biggest sources of business for me. So I try and go to a lot of conferences, and then I try and nurture like the tactical relationships like you, who know a lot of sponsors and have a lot of crossover in the client base, or will know a lot of sponsors and let there be a lot of crossover. And so like, that's it's almost natural. And I don't know, my business has always been, I guess somewhat personal too, in that like I forge bonds with people whom I like and whom I trust and I want to transact with more. And there's a lot of them out there. So that, that seems to work pretty well. But I wish that I had like the mother of all CRMs with, all of my existing clients and top prospects in different markets and we're a little bit more tactical about staying in front of them. And I haven't got there yet. So it's somewhere that I need to go. And I think it would help them.
I'll tell you,
it's on the menu
when you get it figured out, and you will, because it just kind of juices things up, because it's something. Most of what my business is again similar to you in that front, but not as much referral business, because what I do is more mom and pop, and so a lot of mom and pops are not in the same space. They're not going to the same events, and they're not, hanging out, right?
More under the radar.
Yeah, it's not as much referral.
You have to kind of seek them out.
You have to seek them out, and so I have to make sure that I'm very much like on top
Seeking
of
them out.
everyone. I got to call this person next week. Okay, talk to them. Let's put them a month in front. I'm gonna put some sales comps reports together for these people. Like all these nurturing strategies, because the average hold time for a property in Los Angeles is 40 years.
Wow.
40 years,
Wow.
right? From a velocity standpoint.
It's incredible.
So like you got to have a long-term outlook of what these families' portfolio plans are. And you got to make friends with the kids. And then the kids, maybe they want to give it to this person over here. And then they got a estate attorney who is actually the one who's going to be making the decisions, or a financial planner. So it's like it's this puzzle piece that you have to put together in the right way to make it all tie up in a nice little pretty bow, which it never is nice and pretty.
No.
But it's just that continuation. And so I think for you, the next step being able to do that and having both sides of it,
it's huge.
Dude,
it will be huge. People won't slip through the cracks.
No.
And there are definitely similarities. So yeah, that's a big growth area for me, as opposed to sort of just feeling like I'm kind of winging it and being reactionary. On the other hand, there's a lot of demands of the business from an execution side, and you're a boutique, so your headcount is limited, and so there's a cost benefit to try and figure it out. But look, I'm always thinking about it, and I always feel like I could and should be doing more. And like, hey, I've got 8 people at dinner, but could I really have 10?
Yeah.
And okay, so I pay another $100 or $200 a head. Who cares?
Yeah.
So you figure it out.
Totally. It's a very interesting business model. And I love talking to brokers because I'm so much on the strategy side, the strategic thinking of what would make the ultimate brokerage process system. How do you make it so that when you're servicing clients, it becomes this experience that is unlike anything else? I nerd out about that stuff because there's always improvement. There's always room for improvement. And that's the cool thing about a sales job and being in sales is there's never really a ceiling. There's never a max capacity. It's all about bodies and opportunities. And if there's really an unlimited amount. And so if you can work harder and harder to take more and more market share through strategic and creative ways, that almost, and I don't know about you, but there's like this lack of creativity that I think in the beginning when I was doing brokerage that I was missing. I wanted some creativity in the day to day instead of this just like ground and pound, da 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 da. And I found when starting my own team in brokerage that I get a little bit more of that creativity. I get to use more of that
Sure.
creativity in the day to day.
Sure. Well,
Right.
you're the boss, right? And everything sort of is on your shoulders. So you better be really, really nimble. Like, you can't like, what do they say about the guy that like does the same thing over and
Oh,
over?
yeah,
It's the same
yeah.
as all these insane. So
Insanity.
you've got, definition of insanity.
Yeah.
So yeah, you've got to be that way. I agree with you too. Like I'm much more sensitive to psychology and optics, frankly, than I used to be, and probably to my detriment. But that's a normal part of the learning curve. There are certain signs and certain things you probably aren't going to hone in on or don't realize are actually important, even though they are. And that's the nature of being younger in a profession. And I think seasoning. But now, yeah, I think about need versus want a lot on the transaction. Why did somebody say this? It was pretty strategic. And, could they have said that? Should they have? And so on and so forth. So yeah, there's definitely a creative side to it too.
How do you learn? How do you continuously improve your skills?
No, I beat myself up. I don't recommend doing that. And I wish that I didn't. It's a bad habit. It's one that I am working very hard on managing and maintaining and doing better. But I
You
think,
mean like negative self-talk?
yeah,
Got it.
absolutely.
Got it.
And especially when I make a mistake
Yeah.
or a perceived mistake.
Yeah.
But I think you really learn by just being relentless. And that isn't beating a dead horse, but it's just trying to do the best job you can to put yourself in a position to win. And counterintuitively, some of that means like putting yourself out there and you aren't going to win.
Mhm.
But if you learn from those experiences and you learn from what didn't go right, like that's what it is. It's learning to realize, okay, something didn't go the way I wanted it to go, right? I haven't sourced as many deals as I wanted to this week, or, this deal just fell out. All right. Well, what could you change about your sourcing, right?
Mhm.
Was it the week between Christmas and New Year's where everybody is out on vacation, so it kind of doesn't matter because nobody's sourcing deals?
Yeah.
Or was it like prime sourcing season and you were just sitting on the beach, right?
Mhm.
A deal falls out. All right, well, what happened? Why? Is there anything you could have done different in your process that would have stopped that? A lot of times the answer is going to be no, because so much about this is out of our hands, right? An equity partner falls out on a deal. Seller cancels a contract for some reason. There's a title issue. There's an insurance issue. The proceeds come in way, way short for some unforeseen reason, right? There's a Palisades fire or something,
Yeah.
whatever it is. So, you got to like let go of those. But if there was something that you kind of didn't realize and didn't do that was right, then okay, look, it happens. They're occupational hazards. Don't kill yourself. Don't beat yourself up. Just make sure that you never make that mistake again, and that you sort of get really, really smart. One area that I've tightened up like crazy that I didn't used to, I am much more, let's say, attentive and focused on giving clients the best possible guidance that I can at the outset of the transaction, to manage those expectations, to not sell to them. So if there are brokers listening, and look, you each know your profession better than me, but I'll tell you for mine, there's a tremendous urge to sell. Tremendous urge to say, oh, well, you think pricing on this deal is 500 over? Well, I can get you 300 over. You think, you can only get 65% leverage? I can get you 75. You think this is an 8 debt yield deal? Well, I'll do something at a 6 debt yield. And that to me is folly and crazy. And for me, not everyone, that is bad business. And so in addition to understanding clients' needs versus want and why they might hire me to run a process, I also want to make sure that the guidance that I give them is very, very clear, is documented, and is, in my opinion, realistic and not stretching too far. Because I have found over the years that in selling too much, you can contract a bad reputation, and that you will never be able to meet those expectations. So even if you do end up monetizing, and even if, in your opinion, the execution is wonderful, like if a client has to transact at a leverage level significantly lower than what you guided to, and or an interest rate that's significantly higher, it's not going to leave a good taste in that client's mouth. period, ever, full stop. And so, if you're okay not getting that repeat business, so great. I'm not. I'd like to get it. I think that's the promote in our business. That's the residual in it. I think paying attention to that is a really important thing, and it's something that we started to focus on. And now we screen deals and very closely. We ask a lot of questions. We make phone calls to other industry players to make sure that we understand what's going on and we can really deliver the best possible feedback. So we say, hey, 80% leverage is possible here, and we think it's going to cost you 500 to 600 over. Or we say, hey, 65% leverage at 270 over is possible here, but we really have a good idea. Now, things happen, things can change. And when they do, you bring that up and you say, hey, we had talked about X, but now I learned Y. And I didn't know about Y when we talked about X. And immediately saying Y changes X, we need to have a conversation about that. And it's actually hard.
Yeah.
It's really hard to have that conversation with your client. But brokers that can do that and do it well, I believe, get extraordinarily well rewarded and can be around the profession for a really long time. So I think, being pretty street smart and being pretty transparent are underrated and can take you a long way.
Do you do any self-study?
By self-study and what do you mean?
Like, do you read any sales books or psychology books, or do you
advanced?
like what is that for you? What do you do to that?
I have an executive coach that I meet with
Really?
Almost every week.
Okay.
For a couple hours.
What does that consist
part
of?
of my life. I'll meet with him twice a month in person for 2 hours, and then we'll typically do a half-hour call in between that. And then there are follow-up items towards each session. And that's easy. He's both a professional coach and also a personal one. What else? I meditate a lot. I try and work out a lot.
Let me hold on for a second. Let me jump into the coaching.
Sure.
Because I'm a big believer in coaching. So what specifically are you guys discussing in the coaching sessions? Like, is it, okay, here's what happened in my business. What can we do to fix this? Or what do I need to do? Like an outside perspective, what is it specifically for him?
He is a believer that business and life mirror one another.
Okay.
So I would not say that our coaching sessions are all business.
Okay. Like a therapist /
kind of
business coach?
Kind of like a life coach / business coach.
Yeah.
He's more than the therapist. And he helps me work on myself. He's helped me with my marriage. He's helped me with my interaction with my children, with my friends, figuring things out. I would say that I actually came up with the name Priority Capital because of him, and this will illustrate some of what he does. So the name Priority is a double entendre. Part of it is our clients, our priority. So obviously Priority Capital, get you the best capital, prioritize it. The other part is for me on an everyday basis to remember what my priorities are. And I sort of classify my priorities or my pyramid as myself, my marriage, my children, my business, and in that order. And I would caution brokers, it's really easy to reverse that. For a lot of my career, that was reversed, where the business was first. And that comes with a cost. I wouldn't say it's right or wrong. It's subjective. For me, it was wrong. For others, it may not be. And so it's a reminder to myself about what my anchors are, what actually matters in my life, and why I'm doing the things I do on a big picture strategic basis and down to an every minute and every second type basis. So yeah, self-help, professional development, personal development, enormous sides of my life. Coaching is part of it. Mentoring. I have mentors, and I am a mentor, or have been. For ULI, for various other organizations. And I really try to believe in giving back to that next generation. And I was the recipient of a lot of wisdom, and I hope that they will be too. I used to listen to more than I do now, just timing wise, a lot of different Audible books. And either books that CEOs wrote about their journeys, or like some of the, professional development books that are out there to sort of help you guide and sort of build your business. And
what's your favorite book that you've read on that?
Man, I think my favorite CEO book has got to be, there was two that I really loved, but I loved Reed Hastings' book about Netflix.
Okay.
There's just such a different way of thinking to me. I also like Bob Iger's Ride of a Lifetime book. I thought, God, having gone to Disneyland as a kid, was a big one. So that
I'll have to read those. I haven't checked those out yet.
Both are amazing. They're not specifically saying do this and your business will prosper, but you learn from two of the brightest minds, two of the biggest CEOs out there that have built major organizations. And so a lot of what they talk about is pretty great.
What I think makes someone smart is being able to take information and execute on it in a timely manner,
Yeah.
as quickly as possible, right? That's smarts to me. And so I think when you study great people, again, they may not be talking directly about your business, but if you understand the patterns of what they're doing and the recognition that this is similar to this aspect of my business and I can get an idea from that to implement it in mine, I think that's where a lot of the wins come from, because I'm obsessed with that too. There's a podcast that I listen to religiously, which is called Founders,
Yeah.
which
I
this
know it.
guy studies, some of the best founders of all time. And there's so many throughputs of similarities between all of these great, incredible entrepreneurs and the greatest of all time. And so when you realize that there's these patterns that you can do and take in your own business, and the creativity and the smarts comes in figuring out ways to articulate that and actually put it into practice in your own, because they don't give you a roadmap. You have to be able to take that out of what they're doing, that example or situation, and say, okay, what does that mean for me? How can I, build relationships better? How can my sentence structure when I'm talking to clients lead to what I'm doing? How can my emails be better, right?
Yeah.
How did he get a deal done in that situation? What was the psychology behind it, or the steps that he took, and how can I use that in my situation? So it's that continuous learning. I think from a salesperson's perspective, you have to be obsessed with getting better at this job, because if you don't, other people who are obsessed will beat you.
It's a
just
very
matter of
competitive
time.
environment. It is a very competitive environment. You are 100% right about that. So either you're constantly growing, evolving, and improving, or you're not.
One question before we kind of wrap up.
Sure.
How are you, because the brokerage business is somewhat of a treadmill, are you building wealth in other ways that are quote unquote passive income? What does that look like for you?
So it's a good question. People have always asked me, like, do you think you could sell at some point priority for a number? And I don't really know. I don't think about it that way. I think that if I can get to where I'm doing 500 million to $1 billion in deal flow annually, that I'll be making enough current income that it probably doesn't matter.
Yeah.
And I'm okay with that.
Yeah.
And I think that as a society, as a business culture a few years ago, when the market got flooded with liquidity by the government, everyone was obsessed with this because for a moment in time, things were trading at crazy multiples. Not really the case anymore.
Mm-hmm.
So I'm quite all right with a business that generates, a hefty amount of current income, and sucks to pay the taxes, but like I will, and hopefully I got enough left over to, cover my costs and, save and invest. In terms of the investments that I do, it's funny. I'm not a great real estate investor. I was never great on the equity side. I was a pretty good lender.
Yeah.
So I know how to, write small loans. I did
Yeah.
that many, many years ago. But I have invested in 15 or 20 real estate deals, and most of them haven't been great.
Yeah.
So these days I'm investing my money. I've got an IRA in the stock market, but beyond that, into priority capital. And then together with my wife is an architect in GC.
Mm.
And so she has a business that basically, builds and redevelops custom homes for homeowners.
Nice.
And occasionally we'll do a spec project. We're doing one now.
Oh, nice.
And so we'll kind of invest in that. And then we own a couple properties.
Okay.
Just residential properties, not big homes.
Are
even,
you
and rented one of them, and that's it. But otherwise, like, I'm not a sponsor. I don't want to compete with my clients. I don't think I can do what they do. Frankly, I know everybody views a broker's job as risky. I'll say it for the record here. I actually think what sponsors and owners of commercial real estate do is much riskier. Maybe it wasn't back in the day, though I think it always was, and they never could have known values would, go up the way they have.
Yeah.
But I look at what most of my clients do, and I'm like, you're taking an extraordinary amount of risk, much more than I am, actually. And you should be rewarded for it more than I am. Like, if you're a good GP and you make a promote, you should get 4x on your money.
Yeah.
So it's very different. So I used to feel a lot of pressure, and I probably made some investments in 21 and 22 that I shouldn't have.
Yeah.
Small, so they're fine.
Yeah.
But I kind of learned from that like, I'm a guy that needs to just stay in my lane. I'm good at one thing, so let me do that and let me do it well. And if I'm going to invest, let it be with my wife, because that's her business. That's what she does. She does it well. And I'm okay, like, not trying to, sort of like, I don't know, chase this huge pot of gold at the end of the rainbow that, like, is pretty elusive.
Yeah.
And because of, like, FOMO or peer pressure, that isn't me.
Yeah. Well, okay, you brought something up. One more question.
Sure.
The Palisades.
Yeah.
It's kind of crazy what's happened.
Boy.
A lot of people are affected, and there's a lot of land that now needs homes on them.
Yeah.
Is that something that you and your wife would ever do? Is that an opportunity you guys are looking at?
Yeah, so good question. So I'm from the Palisades. And I don't know
Yeah.
if I mentioned that. I probably didn't. And I grew up in the Castle Lamar area. And my dad still has a house there. He rebuilt the one we grew up in. And
Yeah.
luckily he survived because it's made
Yeah.
of stone. But I'm devastated for that community.
Yeah.
On the street, I grew up on 10 houses burned. Vecino Way, it's just shot in the
Jeez.
Port Marina area. You can see some of it from just PCH. You either drive from PCH to Malibu, and pretty much every house from Sunset Mesa to Nobu is burnt on the ocean side. So it's really, really rough. But look, there are always opportunities, and maybe out of some of this devastation becomes opportunities. My wife's actually rebuilding 8 houses for different clients in
Wow.
Palisades now. That's made her really busy. And look, there's part of it that's a little bit uneasy, but it's her profession. People have a need. She's also helping them rebuild their lives.
Totally.
And so, I'm fortunate that we can, and you try and be altruistic and help out
Yeah.
and modify what you charge in certain cases. But like, you also have to make a living, and it's not easy. And it's going to be a long road for that community. And building in the Palisades was never easy. And I know they say they're going to make it easier, but TBD, we'll see.
Yeah.
Look, if there's a good investment opportunity, we'll look at it. I mean, of course,
Yeah.
who wouldn't?
Yeah.
Do I want to capitalize on somebody else's misery? No, I
course
don't.
not.
And
Yeah.
I would hope that, if there's a seller of a piece of land, that he's getting a price that works for him.
Yeah.
And that is going to be different than works for the next guy.
Yeah.
And hopefully that's okay. So sure, I mean, I'd look for opportunity anywhere we can.
Fair enough.
But it's neither of ours primary business.
Yeah.
Right? I am a service provider, and frankly, so is she.
Yeah.
And that's what we like to do.
Yeah.
We like to help people. At the end of the day, you can strip it all away, all the big deals and sophistication. We like people, and we like helping them. And so hers manifests in design and construction,
Yeah.
and mine manifests in like helping guys, sort of procure sophisticated financing options for their real estate. And that's who we are.
Zach, I appreciate you, man, for
Taylor,
coming
you
in. Where can people
Great.
find you? PriorityCapital.com?
PriorityCapitalAdvisory.com is the website. I'm on LinkedIn. I'm on Twitter. And so I'm pretty easy to
You're
find.
throwing-
Plus, they can reach out to you to find me. And so they
That's
know.
true. You're spitting some meat on those social platforms, so please go follow Zach.
Thank you.
We didn't get into the nitty gritty weeds of everything, but he is so knowledgeable on all this stuff that like I learn everything. I learn something new every time you post. So like keep it up, dude. I fucking love it. So thanks, brother.
All right. Awesome stuff.